So basically, this gap between 3 candles is an imbalance. So now I'm going to show you what imbalance doesn't look like. So we have this candle. Let me give you a rough estimate of what an imbalance looks like. Doesn't look like. There must be a gap between 3 candles. That is an imbalance. Sorry about the drawing. All right. So this is not in balance. There's no imbalance. You see, this week and this week is really up here. So this is literally not in balance. This is an imbalance. You'll see a few examples later of what imbalance looks like. So now, why is an imbalance formed and how is it formed? Okay, as we all know, smart money always buy to sell or they sell to buy from our previous lesson. So smart money always sell to buy, and that creates a demand zone, as we all know from our previous lesson. Or they always buy to sell, and that creates a supply zone, as we all know from here. So when this happens, there'll be no supply and demand left in the market. This is why the market will always move so quickly, as we all know, will move so quickly, and that creates a gap, right? And that gap is formed because we don't offer the market on both sides, which is the buy side or the sell side, at fair price. So that will create a gap, or as we call an imbalance, and price in the future will revisit that area of imbalance to fill it before continuing in the given direction. So the main key point about imbalance is that imbalance will always have to get filled at fair price in the future. So if an price leaves an imbalance like this, in the future, it will come back to fill it before continuing either to the upside or downside, depending on the order flow. And now bearish price action, same things. Price will continue to downside. In the future, it will come back to revisit that area of imbalance to fill it before continuing to any of the given direction, either to the upside or the downside. So another key takeaway is that an imbalance also dictates whether a supply and demand zone is good or not. You'll see in the few examples later. Now let's see. Look at the examples. So as we all know here, there's an imbalance over here. Price dropped quickly, came up, left some imbalance over here, and see what happened in the future. Price revisit that area to fill it. Right? Imbalance always has to get filled at fair price. Now, let's look at this. Price drop. There's no imbalance right now. There's this slight imbalance that will get filled in the future, and it did get filled over here. Now, so when price drop, it week to week movement. So between this week and this week was an imbalance. And what happened? Price came back up to fill it. Same thing over here. This week to this week was an imbalance when price was trading over here. And what happened? Price came back to fill it. There's slight imbalance still. And what happens? The imbalance was fully filled.